Welcome to episode 12, Coinbase, symbol COIN. Here's the agenda. A quick analysis of coin stock, news, financials, etc. Call selling backtests grouped by IV. Put selling backtests grouped by IV. Analysis and conclusion. I'll try to say something intelligent about what it means.
What the hell's going on out here?
I've bravely or stupidly recently sold some puts on coin with some money that I'm not counting on. Don't think it's a great investment, it's too risky. But the big premiums caught my eye. So the Yahoo chart in the background shows coin stock from its IPO in April of 2021 through August of 2022. Peaked here at about 343, dipped here all the way to 49, and it's actually a little lower than that in November now at around 44.3. Anyway, let's look at some coin news and financials. A brilliant and successful investor famous for shorting, Jim Thanos. Sorry, Chanos, not Thanos. Thanos. That's the Avengers main villain. I'm talking about the guy on the right, not the left. Anyway, he's been shorting coin and he's been right. As far as I know, he's still shorting it. Not a great thing for going long on coin. One reason he used was they won't be able to continue overcharging their customers with super high transaction costs. Here's Coin's financial tab on Yahoo Finance. Revenue and earnings growth looks great through 2021. Let's look at the most recent quarters. Not so great. Maybe Thanos or Chanos is onto something here. Recent revenue and earnings look terrible. They'll be lucky to make half the revenue this year they made last year. Average cash burn of over $500 million a quarter the last 3 quarters. How long can they sustain that? Here's the Yahoo Finance statistics tab for coin. It looks like they can burn through almost another $2 billion before they start taking on big debt, before their enterprise value overtakes their market cap. So they have a little bit of runway. The price to sales is 2, which isn't bad, but the problem is their sales is decreasing. Maybe the crypto market will turn around at some point, but who knows when. Their short interest is 16.5% of float. So there's a small chance of a squeeze. I'm not sure what the short interest is now. So the next Coinbase earnings is probably in early February, since the last one was early November. I'll be watching the news to see what kind of effect the crypto contagion and bankruptcies have on coin. If coin doesn't get hurt too bad from all the failures, it could actually be good, less competition for them. But that's a big if. I'm very unsure how well their current business model will work in the long run. Overcharging their customers with super high commissions seems a little unsavory. Will crypto trading pick back up? Who knows? Can they innovate and capture new revenue streams with minimal cash burn? To be determined. Now, onto the backtests of selling puts and calls on coin. We'll once again look at the results through the lens of implied volatility. Let's run through the backtest slideshows and their aggregation charts. Here's the first slide in the call selling slideshow. Lowest IV, 0 to 0.51. The IV will go up in each slide. I've set the IV ranges to capture about 1,000 legs in each backtest. First thing to notice is that these first two low IVs don't have any legs beyond the start of 2022. That's because IV went up for Coinbase over time. And later time frame, there just wasn't any legs with these IVs. So they missed out on some good call selling times when Coinbase stock dropped. The middle IVs did really well. They're all making lots of money. Then as we get up in the high IVs, like above 1, like Coinbase had up spikes. This one got hit by it a little bit, and then the highest IV really got hit by the Coinbase up spike, but it still made some money. So let's see if we can make sense of all these squiggles in the call selling aggregation chart. Look at this chart a minute. Pause if you need to. Each pair of blue-green bars is a backtest. It's the result of a backtest having about 1,000 legs in a range of IV. From left to right, the IV along the bottom increases. The date range is April 2021, Coinbase's IPO, until August of 2022, about 16 months. The blue bars are the average length of a leg in the backtest, and the green bars are the average profit loss per leg in a backtest. Not shown on the chart. Total profit loss across all backtests was $32,971. The total legs was 13,523, and there were 14 different backtests. The average profit loss across all backtests per leg was $2.44. So call sellers made some money. Only the really low IVs lost because they were all before the best call selling times when coin was dropping, IV was high, and premiums were up. The highest IV backtests were not the biggest winners as in previous backtests that I've done. They made money, but they got caught in some underlying spikes upward, which is bad for calls. Once again, the lowest IV backtests were the biggest losers. They just don't get enough premium, and IV can only go up for these guys. The profit loss has a surprisingly smooth, beautiful, mathematical polynomial curve. Not sure what it means. If you have any thoughts, leave a comment. What does that smooth, pretty green line mean to you? The average days per leg shows the same pattern again. Slowly rises with low IVs and then falls a little faster as IV increases towards the end. My interpretation is it's too risky for buyers and sellers to make a long-term commitment here at the end, highest IV. But I don't know why the slightly lower average days occurs with the lowest IVs. Again, if you have any thoughts, leave a comment. So let's go take a look at puts now. Since selling calls made so much money right in here, you'd think selling puts would have lost. Will it continue to show low IV losers and high IV winners? We'll see. Here's the first slide in the put selling slideshow. The IV will go up in each slide. I've set the IV ranges to capture about 1,000 legs in each backtest slide. Here's the lowest IV, 0 to 0.53. All these legs were from before coin's big slide down, so it did well. Second one wasn't so lucky, 5.3 to 5.8. Gets progressively worse. This one lost 10,000. This one was the worst. It lost 14,000. Losers, 8,000, 3,000. So here we're all the way up to IV of 1.23 to 369. It's a winner. Most of the legs occurred after coin's big slide down, and IV was high enough to make a lot of premium. Same for the last two highest IVs. So the middle IVs did really terrible. Lowest and highest squeaked out a small profit because they missed out on the big fall and made a lot of premium. So let's go look at the put sellers aggregation chart. Here's the put sellers aggregation chart. Close to a mirror image of the call aggregation chart shown earlier. Look at this chart a minute, pause if you need to. The total profit loss across all put backtests was $43,810. The total put legs was $11,959. The average profit loss per leg was minus $3.66. So put sellers lost over 20% more than call sellers made, and did so in less legs. Good job, put sellers. Profit loss looks like an upside down warped bell curve. Just so happened that 0.66 to 0.71 got hit really hard by coin stock downslope, caught the worst of it, and so did its neighbors. The highest IV and the lowest IV missed out on most of this downslope and eked out a small profit. And once again, the blue curve, the average days per leg, showed the same shape. Slowly increased at low IVs and then slowly decreased and higher IVs. Look at these two ag charts next to each other. It's a great way to get a headache. They're almost mirror images, but not exactly. Keep staring until you have to blink. Put sellers on the left really got nailed around 70 IV. Calls didn't have a range of pain or euphoria like that. That seems to be the major difference. A steep drop in coin stock during these IVs killed put sellers. Both puts and calls have both made a little money in the highest IV ranges. This is the zone where IV can only go down during the leg. Calls only got hurt in the lowest IVs, these two bars, which was mostly the initial climb after the IPO. The mystery of low IV calls and puts were the opposite of their overall environment. Call sellers had the environmental edge, but lost quite a bit. And put sellers had a horrible environment, but eked out a small profit. Coin's stock chart explains this. The lowest IV puts and calls were all before coin started dropping, early after the IPO, before the big trip down and the IV spike up. So what does all this mean? I've been getting a little too excited about the big profits when selling IP options at close to max IV. Here's why. When you've seen the future and know for a fact that you're at or close to the max IV, then you know IV during the leg is probably going to go down. You won't know this in live action. The backtests nicely group them for you, and highest IV is a good recipe for making a nice profit when selling options. IV can only stay where it is or go down. But why have almost all the lowest IV options been such losers? They've all lost in every ag chart except the small profit by coin puts. IV can only go up in this case, and when it moves in the wrong direction against your sold option, you'll lose more than the small premium you collected. So selling options in Coinbase is not for the faint of heart. There's big downside risk, but you're rewarded with big premiums. It may be a good bet, but I'm not willing to risk a lot of capital because I can't say for sure if there's any bottom or margin of safety with Coinbase. Now, I'm not a financial advisor. This is not financial advice. It's just a look at the data with some opinions from yours truly. Let me know what you think of this episode. Up next, I may do Boring Old Ford, another episode on Robinhood, GameStop, maybe AMC, or something else. Thanks for watching until the end, and like and subscribe.